Hello everyone, this is Tina, guest market analyst from FPG. Today is 24th June, Tuesday. US President Donald Trump announced that Iran and Israel agreed to a tentative ceasefire, easing fears of a wider Middle East war that could disrupt the global oil supply. Market sentiment made a U-turn, with oil prices plunging after spiking to a year-high level. At the same time, gold prices also continued to fall due to the risk-on sentiment. In currencies, the US dollar weakened against other major currencies following the Fed officials' comment on a possible rate cut in July. However, it didn't offer any support to either oil or gold prices. In the following video, I'm going to discuss potential market trends of gold and crude oil. Let's get started. So in the previous videos, I've been talking about the negative correlation between gold and crude oil prices, and today I will continue expecting a topping out trend in gold and a bottoming up in crude oil. Firstly, let's have a look at gold daily charts. So gold uptrend in the long term stays intact. However, from a technical perspective, lately it's formed a triple top. Despite a weakened US dollar, gold continued to slump in the last few days, suggesting the downward pressure could take it further down. So in the near term, the immediate support will be still on this uptrend line, which is yesterday's low, and will likely break down below this level and has the next key support area, and I would use 100-day moving average here, as well as a 23.6% Fibonacci retracement. But in the long term, I would still see this uptrend would continue. So the pivotal support would be falling on this uptrend line I draw here. In this oscillator, stochastic has been in this downtrend. At the same time, MACD is moving flat. So both of them continue to indicate a sluggish movement in gold prices. The profit taking could continue in the markets. The next one is crude oil. So crude oil had its very dramatic movement in the last few days. It spiked to a year-high level and then plunging significantly since Iran and Israel reached a ceasefire agreement. However, I would still expect that the prices would consolidate around the pivotal support level, $65 per barrel. Intraday, the uptrend line would be its key support, same as stochastic. It's still moving its uptrend and closing this support level. But here, we have to be aware of this potential bearish divergence. MACD, now the current high is higher than the previous high. However, in the price, the current high is lower than previous high. So this typical bearish divergence have already sent the price down, but the downside momentum could take it further lower and test this pivotal support level. Now that the Middle East military conflict has eased, I think investors' attention would come back to economic front. Global central banks are in the easing cycles. At the same time, lately the US economic data showed a resilient trajectory. On the biggest consumer markets, China has been imposing stimulus measures. So I would expect the growth-sensitive commodity prices, especially crude oil, could continue to consolidate around the recent low, bottoming up from this level. So this is today's technical analysis video. Thanks for watching. See you next time.